welcome to Need to Know, your weekly investment podcast brought to you by the experts at Coutts. I'm Sarah Muir, and I'm joined for a special property-themed episode of the podcast by Director of Coutts Real Estate Investment team, Kitty O'Shea. Welcome, Kitty, to Need to Know.
Thank you, Sarah. Thanks for having me.
And thank you very much for joining me. Now, I know you want to talk about the three things we need to know about investing in the London prime property market. And this is all to coincide with the publication of the latest Coutts London Prime Property Index. But before we get to that, I think it might be nice to perhaps tell us a little bit about yourself and your background, sort of working at Coutts.
Sure, yep. So I've been at the bank nearly 14 years now. I run our real estate investment service where we help clients who are looking to buy or invest in residential property, so main homes, holiday homes, buy-to-lets, helping children on the property ladder, that kind of thing. I also screen private investment opportunities, including thematic real estate funds for some of the bank's most, wealthiest, financially sophisticated clients. I produce a quarterly Coutts London Prime Property Index, and in terms of academic background, not sure if it's relevant anymore, but I have a master's in real estate and international business and finance.
I think for what we're going to be talking about is very relevant. And you mentioned the Coutts London Prime Property Index, and we're going to be touching on some of the findings in that. And for those of you that want to go and explore this in a bit more detail, we will put a link in the podcast notes when the podcast, well, if you're listening to this, the podcast has already been published, so you'll be able to get the link from there. Okay, so let's just start very high level. What are the three things or the three topics you want to cover, Kitty, as part of this London prime property as an investment opportunity?
Yeah, sure. So I want to focus on why central London and why London in general is of interest to our clients and why it still remains of interest to our clients. What's happening in the market. So pulling out some key facts and figures about what's happening in the market at the moment. And then I want to discuss some common pitfalls that we see our clients unfortunately making when they're investing in property.
Brilliant. Okay, so some wise words there. Okay, well, perhaps we should sort of set the scene, and just before we go into some of the data, I guess it would be probably useful to understand why London is so popular then. Why does it continue to be such an attractive city for people looking to invest in property? Maybe not necessarily actually live in the city, but invest in property here.
Yeah, so taking a step back, for me, I think one of the things has to be the architecture. It could be a classical Georgian white stucco building in Belgravia. It could be a beautifully decorative Victorian red brick mansion block. It could be one of your colourful mews houses or a kind of classic townhouse. And some of our clients have some incredible homes in London. They essentially own a slice of history, something that's truly unique. But there's lots of reasons why our clients choose London and the UK more generally as their home or their home away from home. London, as you know, itself is culturally diverse. It's a brilliant city to live in, but it's also got world-renowned independent schools and universities. It's a really good place to do business, which a lot of our clients come to London to do. So it's one of the major financial capitals of the world. It's got a mature legal system. It's well connected, good time zone in terms of doing business with East and West. The list goes on. But ultimately, London is always top of those lists in terms of where the wealthy are looking to buy globally. It's seen as a safe haven. And then looking at it from Coutts' perspective, and as you know, Coutts have offices and coverage right across the UK, but it's no surprise that the majority of our lending book is against property in London and the southeast. So it's clearly very important for us as a bank too, because our clients love it.
Yeah. So as you say, it's an attractive city for a number of reasons. You've got beautiful architecture, and you've got architecture to suit all different sort of tastes. You've got a very good sort of robust legal system here. It's a good place to come and do business. And you've got great schools, you've got great facilities here, great culture, all those kind of things. So that's why people want to come and invest in London prime property. Let's talk then about the latest Coutts London Prime Property Index. I think perhaps before we get into the sort of the nitty-gritty of some of the numbers, it would be useful to kind of understand how the data is actually kind of pulled together. What are we looking at each quarter when we compile the index?
Sure. So the index itself, it's been running since 2013. So we've got data right back since to 2013. It tracks prime property, so property 1 million and above in all the kind of prime London postcodes. So all the usual hotspots that you'd expect. So Hampstead and Highgate in the northwest, right down to Richmond and Wimbledon in the southwest. And then, of course, all the central postcodes in between that. We've also got data on super prime markets, so the 10 million plus market. But the data that we get quarterly, it's pretty extensive. So it covers things like prices, transaction volumes, discounts, stock levels, the time it takes to sell a property, so you can see how things are sticking, yields. So there's lots of data that we can take quarterly to kind of see what's happening in trends, and then we can also break it down, as I said, by location, but also by price bracket.
Okay, so it's a really sort of extensive, really sort of thorough temperature taking of the London property market, so we get a sense of all different aspects: how much is available for sale, how quickly it's selling, is it selling at the asking price? Okay, well, I know that you want to go into some detail area by area because there's some nuances, but what's the kind of what are the headline numbers that we kind of need to be aware of?
Sure, yeah. So the headline, I guess, figure is that prime London properties fell 3.9% in the first quarter this year. So prices are now 1.6% lower than the same period last year. However, if you compare prices to the peak, the height of the market back in 2014, prices are still 9.3% below the height of the market. We're looking at transaction volumes. It's not surprising, but Q1 sales volumes have been fairly sluggish. They're down 7% on last year. And I think, as you're aware, the uncertainty in the mortgage market, over which the point we're likely to see the base rate being cut, which hopefully will be this summer, but it's been dragging on a while now. That's been putting the brakes on transaction volumes.
Yeah, I was going to ask you about that. I mean, I guess probably with super prime, it's probably less of an issue, but with prime property, how important is the interest rate on that market? Because you would think, if we're talking about really expensive homes, how much of a factor is how much you're going to be paying for your mortgage?
Yeah, well, I think it's definitely a factor, obviously, for the mainstream market.
Yeah, it's
a factor certainly for the prime market at the lower kind of brackets. So. I think that kind of around 5 million, that's probably still where you'd see clients using mortgages. Then above 10 million is, generally speaking, a lot of those buyers, it's more discretionary and they may not be using finance. That said, they are impacted by what the rest of the market is doing. So they're affected by the sentiment effectively. So yeah, I think sentiment is an important driver about what's going to happen in the market too.
Yeah. Okay. So it doesn't sound great. We're saying prices are down, and they're way off their peak of 2014. Sales volumes have been a bit sluggish. What about the speed at which property is selling? Is the property that does come to the market, is it selling quickly, and is it selling at a discount?
Yeah, so there are some, I guess, green shoots to say, okay, why we think this year may be a better year than last year. So property is selling faster. So it's selling on average 161 days. That's the lowest figure we've seen in the last 12 quarters. So it suggests there are willing buyers out there. New listings are up. So they're up 3.7% on last year, and they're up 31.5% compared to the end of last year, which is quite good. So hopefully with new properties coming onto the market, that will help activity too. We've mentioned obviously that prices are down, so that is an incentive for buyers on that side of the fence. The other point I think to flag is, and you mentioned it, is around discounts. So the average discounts that buyers are negotiating on prime property across the market is now 8.9%. Okay. So it's slightly down on the previous quarter, but we are trending towards kind of double-digit discounts. So it shows that buyers do have the upper hand in the market. In the first quarter of the year, 45% of sales had seen their published price reduced, and 80% of all sales are sold at a discount. So again, suggesting that buyers do have the upper hand in the market.
That's obviously the headline figure. let's go down then into, because I mean, London is always described as a city made up of actually lots of smaller villages, and that's very much the feel if you're in London. And it's not the same region by region, is it? There are some subtle differences, or actually not so subtle differences in some of the regions. Just take us through some of those.
Yeah, Will, and I guess the subtle differences, and we touched on it by price bracket as well. So another kind of green shoot is that the super prime market actually is performing quite well. So that's the 10 million plus market. Transaction volumes are up 9.1% compared to last year. So there is activity in certain price brackets.
Yeah, and I think I read recently, I think there was it 41 Upper Grosvenor Street that sold for nearly £37.5 million. I think that was acquired for 26 million in 2007. So that's not a bad return. And I think there was another one was at Aberconway House that sold for 138 million. So there's clearly, there's things going on in the super prime market. But what about the subprime market?
Yeah, and the super prime market, we touched on it, obviously less driven by what's happening in the mortgage market, but this is affected by the number of global billionaires, right? Yeah. And that number is increasing, so there is going to be more activity at that level. I guess just before we go on to the local nuances, can I just quickly summarize in terms of what we kind of think what's been happening and what we think is going to happen going forward? Yeah. So, as I mentioned, there are some indicators that we think that this year will be better than last year. And we've seen increased demand from those clients who've held off buying previously and are still in the market looking to buy. So I think obviously that will help activity this year. The general consensus from all the main agents is that over the next 5 years, prime London should outperform the rest of the market. Okay. Prices have been fairly subdued over the last 10 years. So effectively, and we've been saying this for a while, but prime London is long overdue a bit of a rebound. And parts of the capital do look extremely cheap. So,
Yeah, I was going to say, I guess some of that is perhaps a little bit of a hangover from COVID, when everybody kind of moved out of London when they were working from home and they were looking for bigger rural properties with, more space and more. It was a more comfortable place to live if you were going to be in lockdown. And I guess we've had a slow trickle back to the city as people have gone back into offices again. But I guess that's been impacted by higher interest rates. And I suppose it's all eyes on what the Bank of England do this summer. If we start to see interest rates come down, presumably that will add a little bit of sort of added interest into the London prime property market.
Yeah, and anecdotally, like I've been speaking to lots of clients, and we're hearing lots of clients now thinking, okay, they've moved out to the country, but actually I still need that apartment in London because I work in London, right? So yeah, there's still a desire to have some sort of a footprint in London.
Yeah. Okay, so take us through some of those nuances then, because I say it's not looking great, although we're saying that we're expecting to see, we're long overdue a rebound in the London prime property market. A lot of the places we're seeing prices down, discount. But there is one area, isn't there, that's bucking the trend?
Yeah, so Islington is the area at the moment that seems to be bucking the trend. Transaction volumes are down, so they're down 81% on last year, which is quite significant. But prices here have reached a new peak, so it's never been more expensive to buy in Islington than it is now. And so, although we're saying the average across prime London prices are still below the height of the market, that's not true in Islington. Clearly, so this is one market that has completely bucked the trend.
And do we know why that is? Is that because there's a particular kind of property in Islington that's attractive, or is it because there are fewer properties being offered for sale, and so it's just a question of demand is outstripping supply in Islington?
Yeah, from speaking to the buying agents on our panel, lots of them are saying that clients are struggling to find what they're looking for. So I think it's a stock issue. It's probably a bit of a hangover from COVID, where clients are moving. Islington isn't that far out, but isn't you probably get a bit more money, a bit more space for your money, and access to greener outside spaces and things like that. So I think they're probably the two main reasons. Yeah.
Yeah. And what about, perhaps go to the more sort of traditional prime property areas like Mayfair, Knightsbridge, Chelsea? How are those areas doing? I'm assuming then they're more in line with the current trend, aren't they?
Yeah, so Mayfair is a good one to pull out. So for the last 2 consecutive quarters, average prices in Mayfair are now below £2,000 a square foot.
Right.
So that does, so although to me and you it seems expensive, but that does show
It does seem like quite a lot.
It does show that there is actually a lot of value in the
Yeah.
area. So before this, it was Q1 2017 that we saw average prices below £2,000 a square foot. So
Right.
and then if you compare prices now compared to the peak of the market, prices are 19% below the peak of the market. So relative to historic prices, this area does look cheap.
Yes, yeah. Cheap relative is
Uh,
needs to be emphasised there. Absolutely, yeah.
Yeah, and then I get other kind of central areas. So Marylebone, for example, prices are 22% below the peak, and Knightsbridge prices are still 18% below the peak. So yeah.
And I'm guessing we're seeing more properties being sold at a discount in those areas than obviously we're seeing in Islington.
Yeah. So just pulling out some stats to back that up. So 94% of property in South Kensington, so another kind of central London postcode, is sold at a discount to the original asking price. And buyers on average are negotiating 12% off the asking price. So higher than the average across London. And then that's the same is true in kind of Chelsea and Belgravia. So roughly around 90% of all property is sold at a discount to asking price, with buyers negotiating, say, 11 to 12% off the asking price.
Yeah. And I know the average discount, we're going to come back to that because that's an important one, which actually brings us on to, before it brings us on to the third point, which is about the pitfalls. Just obviously, look, we're talking about lots of numbers here. There's quite a lot of data here. Do go and take a look at the Coutts London Prime Property Index, because we cover all this in a lot more detail. So, I think the normal sort of human capacity is to take in about 3 numbers, and then that's your limit. So, and I know it's certainly my limit. So if we're firing a lot of numbers at you, don't worry, go and look at the Coutts London Prime Property Index. Okay, common pitfalls then, and how to avoid them.
Sure.
What are they?
Before we go on to that, sorry now, Sarah, but you did mention about the discounts, and it probably is worth flagging this to our listeners. Obviously, I'm stating these are average discounts. So I think if clients read our index and they just take our stats as they are, and they go into and they use them in a negotiation strategy, they will likely fail. The reason why we're using them is because we want to show a trend about what's happening in the market. I think if a client is buying a best-in-class property in a particular area, and this is the case, and the buying agents on our panel have told us this, sometimes they may actually have to pay a premium to get it, because it's highly sought after. And if you really want it, then to beat the competition, you may have to pay over the asking price. So I just will caveat that these are just averages.
Definitely. I don't get hung up on that, thinking that you're going to automatically get a 10% discount because that's what the average is, and you may end up losing out on a property that is actually exactly what you're looking for the sake of feeling like you're not getting the bargain that you think you're due.
Yeah, exactly.
Okay. All right then. So I suppose we could argue that's possibly one of the pitfalls. That's certainly perhaps a pitfall at the moment. What else are some of the things that buyers need to be aware of? So we do see clients make mistakes, and sometimes they make them early in the search, which is good. They don't end up buying something that's seen as a mistake. But sometimes that when they make mistakes early in the search, sometimes that's when they're referred to us, and we help them through a panel of buying agents. But one of the main things is lack of research. So this is particularly true when a client is, say, moving to a new area or into a different type of property stock, where they haven't really thought through will the property be suitable for them. So it's asking questions like, have I really thought through commuting times? How might work? I guess, say, if it's a bigger property, how much work will I need to do to maintain a larger property like this? And then things like, how will my life differ being in this property compared to where I was before? So if you had previously had the convenience of a corner shop, and now you've moved out to the country, say, for example, will that affect your life, and will it
how it'll affect your lifestyle.
And I guess also moving from, say, an apartment building or a mansion block in London to a standalone house in London, that can be a big change as well, can't it? If you're used to all the amenities of an apartment building.
Yeah, exactly. And the maintenance costs, exactly. Yeah. So that's one, I guess. Then I guess previously, I guess going back to kind of value, but don't presume that the value that the estate agent is valuing it is the value of the property. I know most people won't, but just be aware of that. And again, going on discounts, but don't just simply take the asking price and say, read our report and say 10%, and then presume that negotiation strategy will work. We would say take advice, and we'll kind of come onto that in a bit more detail later. We see lots of clients as well trying to be a bit too clever when it comes to negotiation. They often think of it as a business transaction, but actually if you're buying someone's home and you're trading homes, it's very different, it's very personal. So I think it's about kind of building a relationship with the vendor and the vendor's agent.
Yeah, because if you go in too aggressively and sort of demanding too much of a discount, then you actually could end up offending the person that you're trying to persuade to sell you their house.
Exactly. Yeah. And then another one is, I guess, not being agile enough and being too slow. I think in a hot market, and I wouldn't say the market's particularly hot at the moment, but for certain properties, it definitely is. So when a property is highly sought after, cash obviously is king. But if you can demonstrate that you have a mortgage in the wings, or if you've got an investment portfolio with a line of credit, and this will definitely help build the case for you. Having your solicitors and surveyors all lined up is really important too, so you're ready to push the button if you've got an offer accepted.
And I guess understanding the area in which you're moving into, especially if it's an area you don't already live in, having an understanding of how hot the market is in that area. Like, let's say if it's Islington, right, I've got to move really quickly here because properties are really at a premium here. Whereas perhaps in other areas you can go, okay, I can take my time a little bit here. It's a little bit less competitive. So understanding, again, those nuances from area to area as well is important, isn't it?
Yeah, definitely. And again, in these kind of competitive situations, I think being represented always gives you an advantage over an unrepresented buyer.
Why is that? I mean, it probably is a bit of a no-brainer, but why would a buyer represented by an agent possibly stand a better chance than a buyer representing themselves?
Well, there's a number of reasons. So I guess the first reason is, I guess you're deemed more credible because you've paid somebody to represent you, and that person, you've given that person your brief, and they've gone out to find properties that match your brief. So they wouldn't be bidding on things that they know don't work for you. So that's one of them. Secondly, the buying agents that represent clients will often have bought through these selling agents before. Right. So they'll have relationships with them, and they'll know that they're credible and they manage deals through to completion. So they'll know that actually if I've got a buying agent on a deal, it's likely to go through. And then the other reason, there's probably more, but the other reason I guess is that having a buying agent represent you before, they won't be making offers on things willy-nilly. They will only make offers on things that you're serious about buying. So they will have done a lot of the due diligence before they even make an offer. So the seller will know actually this person is really serious because they will have done X, Y, and Z due diligence on it beforehand. And they're unlikely to fall through because they're represented. So
essentially, it's giving the buyer a little bit more credibility, isn't it? That's what we're saying. I mean, we're not saying for every property, but we're saying if you're looking at the more expensive properties where there's perhaps going to be a little bit more competition, it's a bigger investment, it possibly makes sense to engage a buying agent.
Yeah, well, I just think in a competitive bidding situation, if you've got one buyer that's represented and the other buyer that isn't represented, then the chances are the buyer that's represented will be more successful. All things being equal.
Yeah, exactly. That makes sense.
Somebody's willing to pay a lot more money, right?
Well, yeah, there's always that, of course. There's always that. Which I guess, I mean, and how do you go about avoiding paying too much then? I mean, I guess that's we've talked about not sort of demanding a discount that's not realistic because you're basing it on average figures. What about, perhaps if your dream property, not paying over the odds for that?
Yeah. So again, I'm using buying agents as an example, but if you've got a buying agent representing you, the chances are, well, you definitely shouldn't be overpaying for property. Yeah. The only reason that might happen is if it's in a competitive bidding situation and a client falls madly in love with a property and they know they need to pay X to get it, and the buying agent advises them, you're paying the over the odds here to get this. They will say that to the client, and if the client still wants to go ahead, then they'll go into the transaction with their eyes open, and they'll know they're overpaying, and it will be flagged to the bank in advance to say the valuation is going to come back, and the chances are it's going to be lower than what the client is willing to pay. But we do see
paying that premium because it's a property you want, and you're going in there, as you say, with your eyes wide open. You know exactly what you're doing. You're not going to get any nasty surprises further down the line.
Yeah. But ultimately, the buying agent will be representing you to make sure that you're not overpaying. But in certain circumstances, clients may be willing to overpay. Is the point? Yeah, but we do see down valuations where clients pay over the odds for something that they fall in love with. We do have specialist valuers on our panel, as I'm sure other banks do, but they kind of deal with the right deal with properties and have specialists kind of at certain price brackets. They don't. The thing, I guess, for clients to be aware is they're not looking at values 10 years down the line. They're looking at values now, and so don't be offended or take it personally if a valuation comes back and it's actually lower than what you have offered. Sometimes it can be a blessing in disguise. So clients might say, actually, I'm going to use this to renegotiate. Or sometimes they might say it actually opens their eyes completely and they say, actually, this is completely overpriced. I'm going to walk away from the deal, and they find something better. So, I would say, don't take it personally. But they're doing a job to protect the bank, but also protect the client.
Yeah, absolutely. Okay, so we've looked at why Central London remains so popular for those wanting to invest in prime properties. We've talked about the current situation. We've talked about the pitfalls. I'm going to give you, as a bonus, Kitty, 2 top tips that those looking to invest in London prime property need to take away with them from today's podcast.
Okay. So the first one I would say is speak to your bank, a private bank or your banker as early as possible. It's never too early to have a conversation about your property investment plans and what sort of budget we or your bank can get you working with. So I think that's number one. And then the second point I would say, and we've touched on it already, is take advice. So if you're investing in the stock market, you'll have a good wealth manager like Coutts, for example, advising you. If you're investing in property, and for many of us, it's likely to be the biggest investment that you'll ever make, single investment that you'll ever make. So it makes sense to take advice from a buying agent. They can help clients buy or find pre and off market. They can advise them on price. They can represent them in the negotiations and secure the property, as we mentioned, on the best possible terms. And they'll manage the transaction through to completion. Yes, obviously there's a cost, but it should be viewed, I would say, as an insurance premium, so that you buy the right thing at the right price. And in most cases, and a lot of cases we've seen, they'll save you more off the asking price to completely offset their fees anyway. So one to think about.
And presumably they might save you a bit of time as well, because you'll be perhaps successful with your first attempt to buy a house rather than having multiple attempts, because you're missing out because you're going up against other buyers that are represented by agents. So in the long run, it's probably a good investment. Yeah, and
they'll preview and vet things on your behalf as well, so you're not wasting your time and giving up your weekends going to see properties that look good on paper, but actually never would have worked for you if you knew that it was on a main road or whatever. So
Okay, brilliant. Well, thank you very much. Very wise words, Kitty. Thank you very much. A reminder that the views expressed in this podcast are not intended to constitute investment advice, are accurate at the time of recording, and are subject to change. subject to change, I should say. Thank you very much, Kitty, for joining me today. We'll put a link to the Q1 Coutts London Prime Property Index in the podcast description. And of course, we haven't even touched on the subject of property as a store of wealth, which is one of our favourite topics, alternative stores of wealth. So, Kitty, we'll have to get you back on, perhaps with David or Monique Wong, to do a sort of comparison of property versus equities. Because I know that's a subject that I think probably listeners would like to hear about. So we'll definitely be coming back to this subject. That's all for this episode. We'll be back next week with more Need to Know. Until then, bye for now.